Hello and welcome to the Wake Up Call podcast. Today we are speaking with Mr. Charles Hugh Smith about the war on cash. Mr. Smith is a contributing editor to peakprosperity.com and the proprietor of of2minds.com. He is the author of Get a Job, Build a Real Career, and Defy a Bewildering Economy, as well as Why Our Status Quo Failed and is Beyond Reform. You can follow his work at of2minds.com. You can find him on Facebook under Charles Hugh Smith and on Twitter at CHSM1TH. For more information, please see the show notes page for this episode at wakeupcallpodcast.com/war-on-cash. Charles, welcome to the show.
Thank you, Adam and Daniel. It's my pleasure to be here.
Well, thank you very much. So let's get started with sort of a definition of what the war on cash is, and then maybe some ways in which we see the war on cash playing out.
Okay. Well, again, I should start by saying that I don't claim any expertise on the war on cash as a topic in the broader field of alternative understandings of our socio-political economic system. But I think we all are already aware of the manifestations of this in terms of the number of times we're seeing this phrase "war on cash" in the media, as it and its reference to things like the EU or the European Central Bank stopping the issuing and printing of their 500 euro notes and that kind of thing. I think the way we could start is to orient war on cash within a larger topic called financial repression, which is sort of the grab bag term that is generally used for all the sort of policies that are implemented by central banks and central governments to essentially suppress our freedom within the financial sphere and sort of force us all into behaviors and choices that benefit the powers that be, which would include the central banks and the too big to fail banks and the privileged few who currently benefit at the expense of the many.
And of course, it also helps that a lot of their views on economic thought are based around certain economic models where they try to predict people's behavior. So if they can force people into that behavior that fits their model and fits into their mold, they'll definitely do it. But let's talk about negative interest rates and how that plays into the war on cash. So why would getting rid of cash entirely and moving to some more, maybe a digital currency, how would that affect monetary policy and especially negative interest rates?
Well, that's an excellent question. And I think we can ask, as you said, the models that they're using, which are what are generally called neo-Keynesian, referring back to the classic Keynesian solution for stagnation and recession and depression, which is to encourage people to borrow and spend a lot of money, especially if they don't have money, then they should borrow it. And if they have any money, they should spend it. And that's the way that the current sort of dominant model understands how to get out of stagnation, is that they just try to force people to spend money and better yet borrow it from banks, so they have to pay the bank's interest. So within that context, we have to ask, okay, what's the point of negative interest rates? What's the purpose of this policy? And it's pretty clear that if you're going to be taxed, which is essentially what negative interest rates are, if it's going to cost you money to keep your cash in the bank, then that creates an incentive for you to spend whatever money you have right now. Because the longer you hold on to the money, the more of it that it's taxed, and so it goes down every month. And so that's, at least on the surface, how negative interest rates play into the war on cash and financial repression. The idea is make everybody spend all their money, and in terms of economic policy, it's bringing demand forward, which is kind of a fancy way of saying that if your car would last another 5 years, but you decide that because you're losing money because you've got negative interest rates on your cash, you're going to buy a car today. So all the demand that would have existed in future years is now brought into the present. And of course, the problem with that is then there's no demand in the future because you forced everybody to spend all their money and borrow all the money they can now.
And I'm glad that you called it a tax, because often we hear, negative interest rate environment, and it doesn't really, it's kind of ethereal and strange sounding, and really what it is, it's a tax on savings. So I'm glad you stated it like that, because that's really what it is, and sometimes it's easy to forget that.
Yeah, that's an excellent point, because of course language is a huge tool, and we know that when we're seeing it in the media that it's a form of propaganda. In other words, the terms you use are either persuasive or sound negative. And so, of course, a lot of these terms that are used to describe these policies that are essentially robbing the many to benefit the few, like quantitative easing. Well, what does that mean? It sounds like, are we using measuring cups or something? I mean, and so they obfuscate the reality, which is it's all a tax. Even quantitative easing is a tax on those people who don't have access to central bank free money.
Well, and not only is the war on cash and some of these other forms of financial repression a part of, I guess, a scheme we could say to determine when people spend their money and to some degree how they spend their money, but it's also a way of helping the authorities find out that you've spent your money and how you've spent your money. There seems to really be a restriction of privacy here and sort of an added form of snooping. What are some of the privacy restrictions that we're seeing as part of this?
Well, that's an excellent point. And of course, the ultimate privacy issue here is that you can't do anything with your money if in digital form that isn't exposed to the authorities. In other words, you can't deposit the money, you can't take it out, and you can't spend it. All of those transactions are then transparent. And perhaps just as important to the authorities that they're transparent is every transaction is now available for some tax or the equivalent. So in other words, you have to deposit your money in a bank account. Oh, well, there's a charge for having a bank account. Oh, and you didn't keep a minimum balance. Oop, there's another charge, and you got an overdraft. Well, there's another. None of those charges occur if you have cash. I mean, you run out of cash, you don't have any cash, right? But in other words, and then every sales transaction can now be taxed, and so the standard understanding of this is, of course, the authorities want to increase their tax revenues and take what used to be maybe small-time black market kind of cash-only transactions, bring those all into the spotlight so they can all be taxed. And so this matters actually not just for drug dealers, which is what the authorities always talk about, but actually a large percentage of the working class that has seen their wealth and income decline in the official, paid labor market, that a lot of people are finding that they're able to make money, selling guns and ammo and trading things at the swap meet and this kind of thing, that they're evading taxes, which immediately gives them a 30% increase compared to those of us who are like kind of stuck in the official high tax regime.
What are some of the different ways that the war on cash is being waged around the world instead of just the United States? I know in Scandinavia, they've been much more aggressive with that. How does the war on cash look internationally?
Well, that's an excellent question, and you guys might actually be more knowledgeable than me. So feel free to answer your own question better than I can. I think well, it's interesting if we think about cash on a global scale, and anybody that's traveled around the world, and especially to the developing countries, you'll notice that cash still plays a huge part in a lot of economies around the world. Europe is almost all non-cash already. I mean, like if you're going to a cafe in France or Germany, you're usually just using your debit card, or you're paying by card, and there is still cash, but those societies are largely non-cash already. And a lot of people who are from Europe who come to the U.S. are shocked to find that we still write checks, because that just seems like the 19th century or something to them. There's a little piece of paper and you write stuff on it and you hand somebody. It's like weird, like everybody just uses a card or a bank, a digital transaction to pay their rent or mortgage or whatever. So Europe is already pretty far down the no cash road, but if in the developing world, you'll find that there's nothing quite as good as a $100 U.S. bill, and if the further you are away from cities and so on, the better a nice clean $100 bill looks to virtually everybody, and so cash still matters, is what I'm saying. And the U.S. dollar is, or at least from my experience, the go-to cash currency around the world, and not just for drug trading, but for anything. And so the war on cash is first and foremost an elimination of paper currency. And so the say the European central banks move to eliminate the 500 euro denomination bill is widely seen as a way of eliminating the ease with which somebody could take 100,000 euros or a fairly large sum of money out of the bank, where it's exposed to bail-ins or confiscations or negative interest rates. And so if you remove your paper currency, then you've really reduce the opportunities for people to take their money out of the banking system and out of that exposure to bail-ins and negative interest rates. So if you make it to where there's only small bills, it's very difficult to store like 100,000 euros or $100,000 in like €5 notes. So that's one example of how they're squeezing it down. But what that does, of course, is people always look for another solution. And so the nations which are still issuing large denomination bills, such as the U.S. still has, I think, possibly $1 trillion actual dollars in $100 bills, a very large amount, because it's supplying the whole world with $100 bills. And the Swiss central bank also issues 1,000 Swiss franc notes. So what they're really doing is they're pushing people who want to escape the kind of crushing vice of negative interest rates. They're pushing them into alternatives, which is currencies that are still being issued, cryptocurrencies such as Bitcoin, and to some degree precious metals.
And you use the term bail-ins 2 times during that answer, just so that our readers are clarified. Could you define what a bail-in is?
Right. I'm sorry I used that without a definition. So a couple of years ago, we all remember there was a banking crisis in Cyprus where these private sector banks basically were recognized as being insolvent. They were essentially bankrupt. They didn't have enough assets to cover their business. And so the solution that was approved by authorities and warmly approved by basically all banking authorities around the world. No one complained and said, "Oh, that's an outrage." They all said, "Oh, that's nice. I'm looking at that model." What happened is the bank took depositors' money to cover its own losses and to recapitalize itself. And so, in other words, if you had a large amount of cash in one of these Cyprus banks, let's just say 500,000 units of currency, 500,000 euros, and the bank would just take 100,000 of your money and use it for its own purposes. And so that's called a bail-in, because if the central government raises tax revenues and goes and gives that money to a bank to bail it out, that's tax money being taken to bail out the bank, right? Which is what happened in the U.S. That the banks, $800 billion plus was thrown at the too big to fail banks to bail them out. But in Cyprus, it was a bail-in because it was the depositors' money that was taken directly. So that's a frightening model to a lot of people, because that's part of what we might call this financial repression spectrum, is that so when things get tough for the banks, not only do we have to pay for it perhaps through higher taxes, which because the tax money is being given to the banks, we might also see our deposits just confiscated by the authorities as a way of saving the banks without using tax money.
Yeah, there are really a lot of reasons why everyone is being pushed into the banking system, and anyone who's outside the banking system is running into issues, I guess, from the authorities.
Right. And, it's almost humorous how when we read the propaganda of justifying the war on cash, and as you noted, the Scandinavian authorities are leading the way in terms of the propaganda, saying that this is a wonderful thing, it's the future, and everybody's going to benefit, blah, blah, blah. But they never mention financial repression or the downside to the war on cash, which is once you have no way to hold your money other than in the bank, then as the global banking system falls apart, which we know it will, just like it did in 2008, then they're going to take your money. And they Cyprus model is kind of clever because it always starts by confiscating so-called rich people's assets first, right? And of course, we're all in favor of taking some of those bad rich people's money, right? And so it starts out by, only people that have $1 million in the bank are going to pay this bail-in. But of course, then 3 months later, that wasn't enough. Now it's people with $500,000 in the bank. And then, of course, we all see where that trend goes. When things really get serious, it's people with any money in the bank. And it'll just keep, notching down from there. Because I think we can probably say, why is the financial repression a policy that virtually all central banks are pursuing in some fashion or another? Well, the global banking sector is insolvent. It's like this vast black hole of depreciating or sketchy assets holding up this staggering amount of debt, right? And the debt keeps increasing, but the collateral that's supposed to support the debt is actually non-existent, or it's really, really fragile. Like it's basically assets that are in a bubble. So when the bubble pops, then the bank's collateral vanishes. And so if we look at just the enormity of debt around the world that's held by banks and other financial players, then you realize that the financial repression model is the only way the status quo has to save the sector. And of course, the tragedy in this is insolvent institutions should be liquidated. That's the only way that you can ever get out from underneath that debt, is you have to liquidate it. The assets, whatever they have in the way of assets, are auctioned off, and the bank or the financial institution is destroyed, and the creditors are wiped out, and then we can move on. But that, of course, would basically impoverish a large section of the sort of powers that be, and so that's not allowed. And that's the tragedy behind financial repression, is the few who are privileged in the financial sector are attempting to save themselves and their assets by robbing the many.
So what can someone do to try and prepare themselves for the war on cash?
Well, I think that's an excellent question. I think we all have tried to read as much as we can about that. Obviously, one way is just to hold currency. In other words, just dollar bills or whatever currency you have, or in the case of the world, until the United States bans its currency, then U.S. currency is recognized around the world. So that's the safest cash to hold. A lot of people are, of course, fans of precious metals because gold and silver will hold their value regardless of what happens to digital money or financial repression. But that does raise issues of storage and security. That as we've all heard, that classic sort of prepper phrase, "My lead will take your gold," which refers to the lead in bullets. So, that once you start stacking up a bunch of cash or precious metals in your house, then you have to be really careful that people don't know about that, because then you become a target for theft. So there's no perfect solution to this. I myself think that the cryptocurrencies are a solution that everybody should look at. It might not be right for everybody, but Bitcoin is the current most best known cryptocurrency, and what a cryptocurrency is it's just a digital string, right? It doesn't exist in the real world, and it's not backed by anything. And so in that sense, it's just like all of the fiat currencies like the dollar and the euro and the yen and the yuan, which are also not backed by anything. But Bitcoin is unique in that it's got a limited number of Bitcoins can be issued, roughly 21 million, as I recall. And so the value of Bitcoin is set by supply and demand. And, there were a couple of years ago, there was a lot of security issues with Bitcoin, that some of the exchanges blew up and people had their Bitcoin stolen or lost. And so, but I think my sense, and this is just my personal judgment, it's not a professional assessment or anything, but I think the security's improved a lot. And so what an individual can do is go to some of these companies that issue Bitcoin wallets, and you open an account and you can buy Bitcoins with whatever currency you're using, and then store your Bitcoins in a wallet. And the benefit to Bitcoins or other cryptocurrencies such as Ether, and there's a number of cryptocurrencies out there, is you can make peer-to-peer payments to people around the world. Like I had a guy that did some translation for me in Argentina, and I paid him via Bitcoins, and I avoided all those horrendous fees that banks charge you for using international banking services. So Bitcoin is very low cost to make payments to people to buy goods and services. And so far as we know at the moment, it can't really be taken over by a central bank or government. There will probably be governments that try to ban it and make it illegal. But I think that's a real difficult thing, because the servers can be distributed around the world, and it's hard to suppress a completely decentralized digital currency.
Now, one of the things you mentioned in your article, and we'll link to your article at wakeupcallpodcast.com/war-on-cash, but one of the things you mentioned in there is that there are a handful of prominent economists who are coming out calling for the abolition of cash, not just some form of a war on cash, but complete abolition of cash. Who are these people, and what are some of the reasons that they're giving for abolishing cash?
I'm not really sure about the names. Like Paul Krugman comes to mind, but I'm not really sure if I can nail that particular issue to him personally. But I think the spectrum of status quo mainstream econo pundits like Paul Krugman, and they typically have come out in favor of eliminating cash, often for the reason of getting rid of bad drug money. In other words, it's all those bad drug dealers who are using cash, and if we got rid of cash, then we'd eliminate the money laundering of criminals, and that's often the explanation for why we need to get rid of cash. They're hiding, basically they're not saying the real reason, which is to make everyone's money accessible for bail-ins and taxes such as negative interest rates. That's the fundamental driver, because they're all neo-Keynesians, and they all love the idea of forcing people to spend whatever money they have right now to bail out the current stagnant economy. And they also love the idea of the central state, which they're also totally enamored with, because all solutions come from the central bank and central state in their view. There's no such thing as decentralized solutions or solutions outside of the central government and the central bank. So they love the idea that the central state can then tax every transaction and raise more money to do all those wonderful things the government does. So I think that's, again, a summary, but I think that's pretty much it. It's get rid of criminal activity and enable bail-ins and consolidate all the power in the financial sector into the hands of the central state and central bank.
Do you think that's actually going to end up happening? Do you think we're going to see cash abolished at some point, perhaps not in the United States, but maybe somewhere else?
It's certainly a de facto possibility, as you say, in Scandinavia and Europe, where there seems to be less resistance to the loss of economic freedom that cash represents. I can't say that this is categorically true across all of Europe, of course, but I haven't seen that many media reports of people objecting strenuously to the idea that cash is going to be abolished in Europe, across the Eurozone at least. As I mentioned, I think in some of my pieces on this topic, it's a kind of a natural, a kind of a cultural value system issue as well, because say the Japanese, a lot of people in Japan are still paid with cash on Friday. Their pay envelope is filled with actual currency. It's not like a check or a digital stub. And so those nations with a deep attachment to cash as the only real form of money, the authorities are gonna find tremendous resistance to eliminating cash. And in the U.S., my hope is that people will realize that cash is not just a representation of money, but it is a representation of financial freedom and protection against snooping, as you say. And so hopefully the Americans will object strongly enough to this idea that no one will even propose it.
All right, now one more question before we wrap up. I don't know if you saw this advertisement, but PayPal has been running an ad campaign showing how wonderful a cashless society is, and they started running this ad during the Super Bowl, and they've run it several times since then. So if you have seen the ad, what do you make of it? And regardless, where does PayPal fit into this overall war on cash?
That's an excellent question, and I've never heard anybody discuss that. PayPal is an interesting institution in that it is acting more and more like a bank, but it is not a bank. In other words, it's not regulated like a bank. And as we all know, the solution to the 2008 global financial meltdown in terms of the U.S. government was, let's load the banks up with 1,200 pages of regulations. Like we're gonna get rid of all that bad stuff by implementing thousands of pages of regulations. Well, of course, all that did was just create more costs and more opportunities for really sharp attorneys working for the banks to find loopholes and so on. So that didn't really solve anything. It didn't address the problem of collateral or insolvency, rising debt. None of that was addressed. So the thing about PayPal is it's an interesting model because they get to do everything that a bank does, but they don't have any of those costs of regulation. And for instance, you can also borrow a couple $1,000s off of your PayPal account. And then of course they would love a cashless society because they get a transaction fee for every transaction you conduct, within your PayPal account. So they would love it. And we don't know how much of the global financial transactions will eventually be done outside of traditional banks. And PayPal might just be the tip of an iceberg that we could see, like Google starting to institute micropayments or something like that starts taking on some of the roles of banks. And we can also see it in peer-to-peer lending because one of the functions of banks, if we want to look at it real briefly, is they as a trusted institution clearinghouse for transactions, so that when you buy or sell something, that there's a trusted institution to oversee that and make sure you didn't get ripped off. The other thing is they're supposed to allocate capital, meaning that they take people's savings and then they're supposed to figure out who's a good credit risk and then loan that money at interest. And so the peer-to-peer lending movement basically bypasses that whole method of allocating capital from the top, and it allocates capital from the decentralized peer-to-peer. So to kind of answer that kind of roundabout question, to kind of wrap up my answer, is PayPal, I think, is a leading example of a non-bank financial institution which is extending its services into what were traditionally the banking sector. And because they can charge money for every transaction, they would love a cashless society. And it's another thing to look out for, that when private institutions like PayPal or enterprises are getting behind the war on cash, you can be sure it's because they plan to reap billions of dollars in profits from that.
Okay. Well, I think that about wraps it up. Thank you very much for coming on to the show. We really enjoyed having you. Where can our listeners go to find more of your work?
Please visit me at of2minds.com. and you can read free parts of my books and look at my archives of other articles that I've written on other topics. Well, thank you very much, Adam and Daniel. I really appreciate the opportunity.
Well, thank you, and I just want to remind everybody to go to wakeupcallpodcast.com/war-on-cash, and we'll link to of2minds.com. We'll link to your Twitter account. We'll link to the article, all of the resources that we've discussed over the course of the interview, the books as well. So wakeupcallpodcast.com/war-on-cash is the place to go for this episode. And Charles, thank you very much for joining us today, and we'd love to speak with you again sometime soon.
I hope so.
All right, well, thank you.
Thank you.
Thank you for listening to this episode of the Wake Up Call podcast.
If you would like to listen to more episodes, please subscribe, rate, and review the show on iTunes, or subscribe on Stitcher, and check out our website at wakeupcallpodcast.com.
There you will find show notes pages and comment sections dedicated to the show. You can also email us at contact@wakeupcallpodcast.com if you're interested in being interviewed for the show or have any other suggestions.
Thank you.